Hi, my name's Adam. Welcome to the channel. Today we're going to go through 5 tips that we have to prepare your retirement savings for retirement. Before we jump into it, if you haven't already subscribed to the channel, hit the subscribe button. We release 3 videos every single week on retirement, tax, estate, and financial planning for Canadians. So this is a financial planning channel for Canadians, which is very unique. We're not here to sell anything to you. We're just here to provide information. And based on the feedback we're getting from you guys, I think you guys are valuing the information and the videos we're providing. If you have any recommendations for future videos, leave a comment below. We do have a list of videos that we're putting together for people based off of comments and suggestions, and we really do appreciate it. So if you're looking for a certain video, post it below. We don't promise that we'll create it. There's some videos we're not going to create for certain reasons, but most, anything around financial retirement, estate tax planning, we'll put in the pipeline and we'll get it made in the next, weeks or months ahead. So tip number 1 on how to best prepare your retirement savings for retirement is start creating a realistic lifestyle. So if you live a lifestyle right now that's extreme, maybe you're making $300,000-$500,000 a year in Canada, you're in a high net worth, high income level, and you have a high lifestyle, make sure that if you want to continue that lifestyle, that you have the funds to continue that lifestyle. And if you don't, you need to start winding down. So if you're, say, early 50s, planning to retire at 60, spend the next 2 years just kind of adjusting things and tweaking things so that when you hit retirement, it's not a huge shock and there's not a huge change to lifestyle. The people, our clients that we walk through to retirement, usually we've set it up as best we can so that when they, pull the trigger on retirement, their life doesn't change a whole lot other than when they wake up, they don't go to work. But the things they do, the money they spend on, all that kind of stuff, nothing changes. So if you can prepare your lifestyle for retirement now, before retirement, if you're not retired already, that's going to help just ease the transition. Retirement is such a psychological shift. It's actually more psychological than financial at the end of the day. So start preparing for that today. Tip number 2 on preparing your retirement savings is having a budget, understanding where your money is going. If you don't know how much you're spending today, then it's going to be hard to build a plan for retirement. So, when we work with our clients, one of the questions we ask is how much do you want in retirement? And that's not us saying give us a fluffy number. It's, we're looking for how much to pay your bills and then how much you want for travel and other stuff. When we get those, then we can build out a plan accordingly. We know that base number, let's say it's $30,000 a year we need to pay our bills. And then in the first 5 years, we want, say, $20,000 every year for travel, and then maybe that winds down over time. So we can build a plan based on that, but we always need that $30,000 increasing with inflation through retirement. So make sure you know what your set expenses are, what you want to spend in retirement, what you're currently spending now, and just review it, right? Because you might have expenses before retirement that might not be there in retirement, and vice versa. So just understand your spending, your expenses, and that will help guide your retirement savings to where it needs to be for retirement. So the third tip is to work with a financial planner on creating what we call a playcheck. Okay, so right now, if you're still working, you're collecting a paycheck. Every single month or 2 weeks, whatever it is, you get a paycheck deposited to your bank account. You go to work, you get paid, you don't really think about it. But when you hit retirement, that shifts. And that's why I say retirement is such a psychological shift for most people. I always joke with our clients as they transition. I become more of a counselor than a financial planner. So just be aware of that. It is a very, it's a psychological shift that a lot of people have a lot of tough time with. So if you, work with a financial planner, create a strategy so that, when you pull that trigger to retire, you know exactly where your income's coming from, and you can set it up so that 2 weeks after you retire, there's a paycheck that comes in. It might be from CPP and OAS and a bit of your RIF and a bit of an old pension plan. It could be multiple sources, but there's a plan, there's income stream, and you're stress-free about where that paycheck's coming from. So, a lot of you watching these videos, obviously you're watching on YouTube. There's a lot of DIY investors on YouTube, and that's great. We've started working actually with quite a few of you on fee-for-service plans. So find a certified financial planner in your area that offers fee-for-service plans. So this is a financial plan, a detailed financial plan that'll break down all the numbers, scenarios, strategies, and will actually give you a clear plan and clear guidance on where your income stream is going to come from in retirement, how much, how long it'll last, when you can take it, if there's a bit more early, a bit less later, whatever it is, whatever type of plan that you need. And you should be paying somewhere between $2,500 and $5,000 for that plan. But if you're a DIY investor, you're saving on fees technically by investing yourself. I get that. But spend a bit of money, get a financial plan in place so that you have a clear understanding on where your income's coming from. And make sure that you have a tax efficient plan on where that income's coming from, right? Where you take your money from will vastly change the amount of tax you're going to pay both now and out of state when you die. So have a plan, work with a financial planner. If you're a DIY investor, make sure you spend a bit of money, take that step, get a plan in place. We'll put a link below on how to find certified financial planner in your area. If you can't find one, or if you want to reach out to our office, you can email us info@parallelwealth.com. We do fee-for-service financial plans. We're working with 4 of you from YouTube right now on those plans, and we continue to work with a lot more, I'm sure, moving forward. I think we have about 12 or 15 calls lined up in the next week with you guys. So happy to jump on a call, see if we can help you out, if you're a good fit for us, if we can make that work. But yeah, email us, we'll book a call, we'll jump on a call, see if we can help you out, and just explain to you what that looks like. So, or just search in your area for a certified financial planner that can do a fee for service. They're not trying to sell you a product or anything like that. It's simply a plan that's probably what you need most. Okay, so the 4th tip is put your savings on autopilot. And this seems so simple, but so many people don't do it. Especially in 20s, 30s, and 40s, what we see with our clients, deposits are all over the place, right? It's like, I'll do $200 a month, and then they change it to $50, and then it's $250. It's just all over the place. There's no consistency to the savings plan. We find that when you hit late 40s into your 50s, people become more consistent because they're more aware of what it means for retirement. So the younger you can start a consistent autopilot plan, the better off you're going to be. And if you work for the government, you'll see on your, or anywhere that has a defined benefit pension plan, you're going to see on your pay stub that there's, X amount comes off every single pay. And my wife is a registered nurse by trade. I remember on her paychecks, there's roughly $300 taken off every single paycheck that went to her pension. So even when she was in her early to mid 20s, she had $300 coming off every single paycheck that was going to her retirement savings. So, people say, oh, you have a defined benefit plan, lucky you. The reality is people that have a defined benefit plan, yes, they're great when you retire, but they've pumped a lot of money into it and it's been an automated savings plan. So, if you want to create your own defined benefit pension plan, start saving a whole lot of money on a consistent level every single paycheck. It probably means $200 to $400 every single paycheck needs to go into savings. So if you can't do that, then you're not going to build your own defined benefit pension plan. If you work for a company that has a defined benefit plan, it comes off your paycheck and you get used to a smaller amount to spend on a monthly basis. You need to start working to transition towards that. So if you're getting close to retirement, make sure you get that saving on autopilot. Don't vary from it. If you're saving $1,000, $1,500, $200, doesn't matter what it is. And especially if you're nearing your retirement and your mortgage is paid off or it's going to be paid off soon, whatever your mortgage payment is, start saving that into your RSP tax-free, wherever you're saving it, just as if it was your mortgage payment. So now instead of paying the bank or your mortgage lender, you're paying yourself, you're saving up, and allow that money to compound heading into retirement. Okay, so the 5th tip I have for you in kind of building out and planning your retirement savings for retirement is invest for the long term and review your investment strategy often. So what I mean by that is when you put money into an investment, whether it's an RSP, TFSA, if it's for retirement, have a long-term plan for that. And I'm really talking to not just the 20, 30, 40-year-olds, but I'm talking to those that are pre-retirees because we see people do this all the time. You're putting money into your accounts 2, 3, 5 years before retirement, and you're very cautious. You're tiptoeing in, you're keeping it in cash, you're doing high interest savings account at 0.2, 0.3% right now. But the reality is, even though you're retiring maybe in 3 years, you don't need, hopefully, the majority of that money for many years. So, on average, you're pulling out about 5% out of your portfolio in retirement. So if you put in $10,000, technically in 3 years or 5 years, whenever you retire, you need 500 of that 10,000. So it's a very small number. And if you create like a dividend paying portfolio, hopefully your dividends can almost generate most of that cash flow anyway. So, plan for the long term, have a long-term view in your retirement savings. Again, that doesn't equate to more risk. It just equates to having a strategic plan that's not about 1-year GICs that's going to pay you very little interest, doesn't get your head, and doesn't even keep you up with inflation. Like if you're not earning 2% on your investments on average, you're losing to inflation. And your accounts are actually, they may not look like they're going down in value, but truly they're going down in value with regards to buying power. So when you talk about inflation, so if inflation's 2 and you're buying a GIC at 1.2, you're losing money every single year on your retirement savings. The last part of this tip as well is make sure you review it regularly. So again, a lot of you on here are DIY investors, which is great. Just make sure that your plan still fits your retirement plan. So if your investments line up with where you want to be in retirement, again, there's going to be a point where you transition to a DIY investor. You might hit your 70s, 80s where you just can't do it anymore. So make sure you have a plan for that. The second part of this, and this is really important, hopefully you stayed on the video to this point, because I think this is a very important part, is make sure that your spouse or common law partner is involved in the finances. And what I mean by that is most common, one person in the partnership runs the finances. So for my family, it's myself. So I run, the savings, the financial aspect of our family, and my wife isn't as involved. And, a couple of weeks ago, she actually asked me, she's like, Adam, I need to have a better understanding of what's going on, the plan, where stuff is, how to get into it, all that. So we actually sat down, I created a spreadsheet for her with all of our accounts, assets, liabilities, how to get into accounts. And also, if I died, how does, what happens next? What's there for her? How much would be left? What to do, who to talk to, because at the end of the day, for our family, I am our financial planner. So we put a plan in place where we have a backup financial planner, much like I do in my business. If I pass away, I have a few financial planners that will come in and take over my business, help our clients, and make it a smooth transition. But I forgot to do that for my own family, which sounds crazy. But so now we have a plan in place for my family. If something happened to me, my wife knows who to go to. That person knows our situation, where everything is. So make sure your spouse or common law partner has a clear understanding of your financial world. And many of you I talk to on the phone, that's not the case. So make sure you involve both people in your relationship. If you're married, if you're common law partner, if there's someone in your world that's part of your financial life, make sure they understand what you have, where it sits, tax consequences, everything about your financial world. So if they don't have that information, sit down this weekend and the weeks ahead, days ahead, and map out a plan. Just create an Excel spreadsheet of a summary. And show them, hey, here's what we have, here's where they are, here's how to access them. And if I pass away, here's a person to talk to. Maybe it might be the executor of your estate. It might be a financial planner that you've worked with or are working with, whoever it is. Make sure there's a plan in place. So my challenge to you over the next couple days or weeks ahead is to bring your spouse or common law partner into the financial conversation. Make sure they have a clear understanding of what's going on in your family financial world. Because too often, one of the spouse or common law partners has no idea what's going on. So let's change that. I want everyone watching these videos to make sure that everyone in your financial relationship has a clear understanding what's going on. They know where the assets are, where the liabilities are. And if the person that's in charge of the finances in your household passes away, they know where to find everything, who to talk to, and make it a smooth transition. Because trust me, if you're watching this, you're probably the person that's more in charge of the finances in your family. If you pass away, your spouse or common law partner, the last thing they want to do is start figuring out where all the accounts are and all that. Don't leave that on them, right? Educate them now, show them now, help them out, get them in the circle. So if something happened to you, they're left behind with a nice smooth transition, and they don't have to worry about the financial aspect of things. They can worry about losing you and grieving and all that kind of stuff. So that's my challenge to you. Hopefully you take it and run with it, and it makes change in your family and your relationship, and just creates better transparency between you and your spouse or common law partner. So thanks for joining us today. Again, if you enjoy these videos, hit the thumbs up. It really does help get these videos out to more people, and we really do appreciate it. So thank you, and we'll see you in the next video.